So traders, at this point, you have everything you need in order to begin back testing the pullback strategy. We've talked about structure and the trend analysis you'll need in order to backtest this strategy. We've talked about the indicators you need, and you should have those already on your chart, the ATR and the 50 exponential moving average. We've talked about the full rules list of the pullback strategy for entry number 1 and number 2, and we've even went into great detail on the advanced engulfing entry we're going to be using for this strategy, along with the stops and targets, giving you everything you need in order to start your backtest. Now, before we start the backtest specifically on the pullback strategy, what we're going to do is discuss some universal main points to backtesting. What I mean by universal is that these are going to apply not only to our pullback strategy backtest, but to any backtest you do on any strategy you learn from someone else, learn in the advanced section of this course, or create on your own. So let's go ahead and discuss some of these main points, and after this video we will dive in how to specifically backtest the pullback strategy. So some of the universal main points of backtesting: number 1 would be test as if you were really trading. In other words, take this backtest very serious. And the reason this is important is because backtesting is going to be the foundation of your trading strategy. The backtesting you do will give you the opportunity to adjust rules of the strategy in order to improve it. It will give you the opportunity to adjust the stop loss and the target. And once you come up with all of your rules and you have everything you need in order to actually go through with backtesting, you need to take that process extremely serious, because these backtesting results are what's going to give you your estimated ROI, your estimated winning percentage, and most importantly of all, your estimated drawdown, so that you have the opportunity to create a risk management plan around your risk tolerance based on historical performance of this strategy. So that's why it's so important to take this backtesting process extremely serious, and this backtesting process is going to be just as important as live trading. That's why I say rule number 1 is to test as if you were actually trading live. Rule number 2, always test from left to right. Let's discuss a little bit about what that means. Testing from left to right would be, I know I'm drawing all over my words here, guys, but just bear with me. Testing from left to right would mean do not test looking in the middle of your screen. Do not test and say, oh, that's a win, when you can see all of this market data. If you can see all this market data, then you're testing wrong. What testing from left to right would be is only looking at the far right edge of your screen while you scroll to the right, meaning we can't see any of this information to the right. That's the way you want to test. You don't want to test with being able to see what happens next, because that's not giving you a very similar feeling to trading in reality. When we're trading in reality, we cannot see what's to the far right edge of our screen. We can't see past the data that has been created, and that's the way we need to test as well. We need to test as if we can't see the data to the right. And in order to do that, we have to scroll our chart and let the edge of this screen be the only thing that we're looking at right in here. That way, whenever we see an entry candle in the edge of the screen, we're able to make a decision before we see the data that comes afterwards, before we see whether or not that trade won or lost. We'll dive into that a little deeper later on in the video. I'll actually go down to a chart and explain to you guys what I mean by this in a little further detail. But rule number 2, always test from left to right, so you can't see the next data that's going to be produced, and you can't tell whether you won or lost the trade before deciding if it was an entry. Rule number 3, have a solid set of rules written down before you begin to backtest. Now, there is going to be a process before backtesting if you're creating your own strategy, that you go through the market and you just kind of pick out trades and start to create rules. This is not backtesting. This is strategy creation. So during that process, it's not important to have a solid set of rules written down. I would take notes about things that work and didn't work. For instance, the stop loss you're going to use, the different ways you may define trend and structure, the different ways you may define your rules for that strategy. That process is not backtesting. But when it comes to sitting down and you have already done that process, you have these rules in place that you're going to be using based on what you've seen in historical data. Have that solid set of rules written down. This way, you're not curb fitting your strategy. You're not going through the market and saying, well, I would have used a 35 pip stop loss here instead of a 30 pip stop. But then you're not implementing that in the previous trades you've tested, nor are you implementing it in the future trades you're going to test. So that's what's called curb fitting. And if you don't have a solid set of rules written down right beside you, you are way more likely to do that, to make that mistake in your backtesting process. So make sure to have a solid set in stone rules-based system written down before you begin your backtesting process. Now, number 4 follows along with number 3, and this is very important as well. Goes back into do not curb fit your strategy. Do not change any of those rules at all. Once you have them written down, on a piece of paper beside you and you're testing, go ahead and finish that test with those rules. And if you notice something else, write it down as a note on that paper. That way you can go back and retest that full section using the new rule you've created. Do not, though, change any rules at all during your backtest or curb fit your strategy while backtesting, because that will give you non-accurate results and a non-accurate estimation of how the strategy may perform. So, rule number 4, do not change any of the rules at any time once you have a solid set of rules for your system that you're going to be backtesting. Number 5 ties in with number 2, always testing from left to right, and that is if available. If your charting platform allows this, always test with market replay. What market replay will do is not allow you to see the future market data. You can replay the market from the beginning of 2018, from the beginning of 2016, however far back you test, and you won't be able to see any of the data after your current candle. It'll print the candles as if the market is trading live, but in replay mode with market data that's already happened, say from the beginning of 2018. So if market replay is available to you, I would always suggest testing with market replay to give you a more similar feeling to trading live. Rule number 6, if you are 1 pip away from being stopped out during your backtest, then count that trade as a loss. It would be a very rare situation that in live market data, you get 1 pip away from being stopped out and don't get stopped out. The only situation I can think of is maybe during the market open of the London session at 3 a.m. or the New York session at 8 a.m. and maybe on the euro dollar. That would be the only situation I can think of where if you were 1 pip away from your stop loss, you may not be stopped out, and you still more than likely would be stopped out in that case. So something that I've implemented into my backtesting is if I am 1 pip away from being stopped out in my backtest, I count that trade as a loss. And number 7, the final main point is to test or count only the trades that you would have been able to complete based on your trading, sleep, or work schedule. So what I mean by this is if you have to sleep for 8 hours a night, right? And let's say we're trading the pullback strategy. I'm going to do this based on Eastern time because that's where I live here in Atlanta, Georgia. So if I know I'm going to be sleeping, let's say from 10 p.m. to 6 a.m., then what am I going to miss? Well, the 4-hour candles close at 5 p.m., 9 p.m., 1 p.m., 5 a.m., 9 a.m., and 1 a.m. That's the schedule for 4-hour candle closes, and that's what this strategy is based on, right? It's 4-hour candle closes. So if that's the case, what am I going to be missing? Well, if I'm asleep from 10 p.m. to 6 a.m., I'm missing the 1 a.m. close and the 5 a.m. close. So those 2 times are times I would not be able to trade, and I need to consider that when looking at my backtesting results. Now, that doesn't mean that you don't need to test those. I would point them all out. I would point out every entry that you see and then go back through the specific pair you're testing and discount the trades that are during work hours, during sleep hours, or only count the trades that are within your trading schedule. So these are all main points that I have either struggled with in the past or just learned from my own testing, and it's something I wanted to share with you guys before we begin the back testing process. Also, we'll go ahead and head down to the chart. I'll talk a little more about testing from the left to right, and also I'll show you where TradingView's market replay is. So here we are. Let's say we start testing, and I'm going to give you guys an example of what not to do. We're testing from 7/12. Look down here. Stay with me, guys. We're testing from 2017, 12/13, excuse me. So on December the 13th is where we want to start our testing. What an example of not doing the correct thing would be is sitting here and looking at all of this data and going, okay, I see a winning trade here. I see a winning trade here. I see a winning trade, winning trade, winning trade. That would be an example of what not to do, because in this case, you're looking at all the data and you're able to see whether the trade won or lost before you actually place the trade. That leaves way too much room for you to curb fit the strategy. So what I like to do is have my rules written down and then scroll the chart to where, if we're trading from 12/13, which is right down here, of 2017, our horizontal line, now we can't see any of that data. So since we can't see any of that data, it makes it a lot more similar to trading live. We just zoom the chart in like so, and we go ahead and scroll to the right. You can either do this with the arrow keys on your keyboard or just grabbing with your mouse and scrolling to the right. And what we see is we're looking for our pullback entry And I'll just go through a couple of these with you guys. And still looking right here on the right hand side of our screen. And there we have an entry. So that, if you're doing it this way, if you're doing it by just scrolling the chart to the right, once you see your entry candle, stop scrolling and decide whether or not it's an entry. Go ahead and look at the chart. Is this an entry? Right here, our green engulfing candle. Is it an advanced engulfing entry? The answer to that question is yes. It's a swing low engulfing candle. Is it above the 50 EMA? The answer is yes. Have we made new highs? The answer is yes. So this, in fact, is an entry. I know that before I look at the next market data, before I know if I lost the trade or won the trade, I know that I would have entered the market here. And you can go ahead and put on your profit taking and stop loss tool. That's not what I'm gonna do right here because I'm just showing you guys this as an example. And as you can see, the market rolled up, hopefully hitting targets. We'll check that later on in the course. But that's what I mean by always testing from left to right. And an even better way to do this with TradingView, we have something called replay. It's right up here. Follow me, guys, right up here at the top of your screen. It says replay. All we have to do is click that, and our red vertical line will allow us to start that market replay wherever we would like. So now we have market replay from 12:13. What this means is that we don't even get to see any of the data after this. So we can treat this a lot more like live trading, and we just have our little replay speed here. Click the play button and it starts printing candles. And this way we can sit here and wait for what we look and see as an entry, and then we can pause as soon as we see something we think is an entry, and we can actually decide whether or not it's an entry before we see the next market data, which is something that's extremely important in backtesting. So hopefully now you know the main points that you need to keep in mind while backtesting any strategy, not just the pullback strategy. So guys, these are those main points that you need to keep in mind. Go ahead and write them down. You can pause the video if you need to. In the next video, we'll dive into specifically testing the pullback strategy.